I mean, there really isn't anything here. Oh my gosh. Well, okay. Test here, something, 31, 32. Well, good morning, everybody. Welcome back to a brand new day. Today's Thursday. Now, check this out. I really thought we were going to see, well, we are in this higher time frame buy program, right? From the inception of this low, this high, we made a dealing range. That's considered a buy program. But the thing about buy program is that they tend to retrace back down to discount level, to a discount area or equilibrium before it decides it wants to continue moving forward. So while it does that, we want to make sure we measure the B leg. So this whole high to low is a phantom leg, I would consider it. And we're looking for a cracking correlation, attacking old sell side liquidity pools so that once it gets to that area, we'll see if there's an SMT divergence between the other classes. And depending on what kind of reaction we get, we'll draw our fibs from this high to this hypothetical low, for example, wait for price to expand close above the 25% level, enter, and then see that sucker run. Now, the thing is, because of yesterday's price action, which was FOMC, and I was away from the markets, I was out there having a life. Um, it was great to see how price ended up dipping down to London Friday's New York lunch sell side liquidity, which is what I was aiming for on Tuesday. See here that we have some demo trades put on here. I was really aiming for Tuesday to get that sell side liquidity, but price decided to hold a little longer in price, and then on Wednesday when we had NFP or FOMC, sorry, price took a dip down to the sell side levels. But look how much you had to retrace back up again. So that would have stopped me out of my initial entry. So while you have a runner, let it run. Um, and I marked these all yellow because these lows were all referred back to on the other instruments, the other sisters, I like to call them, like the US 500, US 30. So I suspect these lows, when we come back down in the sub program, they would be easy targets for price to pierce through. And right now, here's the thing: it hasn't been any other sell side liquidity pool left, except for Asia's low. Like that. But even still, let's see here. It's been pierced. It's been referenced by the algorithm. So there's a lot of sell side. That was the only sell side I could find that was relevant. Anything else would be Wednesday's PM session. So we could be in really deep trouble again, trying to see sell side in this higher time frame bullish price action. When I turned on my live stream, you most likely saw my note saying first stage SMT, really good reaction. But then when it did retest the old high, possible retracement to go up higher. I was thinking that because we had this high reaction, these old highs, pierced through it, but they weren't being referenced by the other markets, the other sisters. I really thought from this low to this high would be a nice sell side mini sell side delivery program that can take price down to further discount. But when I saw this high again pierce through, I was no longer interested in it because whenever I see a second stage SMT, that usually tends to treat it as a retracement back down to equilibrium, and then it tends to go up in the intended direction. But now, upon studying the markets a little bit further, um, if you look at this high, the 830 high formed on US 100, and the 840 high formed later. It's a high and a higher high. We go to the futures, which is more accurate. There is the high at 830, but then there's a lower high at 840. See that? So could have taken down this low to this high, close below 25%. Set your, we are now activated in a short-term sell side program. Set your stop loss to 20 handles, okay? And look at how much price pierced, played around that level. Would have been a little bit challenging to hold, not gonna lie. But you had until, excuse me, you had until 9 o'clock to hold up to this position. Let's go back to MNQ and let's try out 9 o'clock. Okay, no problem. 9 o'clock, we were still holding, but it would have been a break-even trade. No worries, but the logic is still there. 25%, keep holding it, and then let it rip. That SMT on the CFDs versus the futures, that's also something that I'm interested in looking at. And sometimes it tends to signal you whether a market is strong or weak, or that particular instrument is strong or weak. And I have referenced it getting into some entries as well. But that would have been really cool. I mean, look at that 10 handle stop loss on CFDs. You would have taken this leg from this high to this low. Why? Because we're referencing this high now. Price will trace back up. Apologize for that. I apologize for that misconfusion. I misspoke. Take this low to this high. Why? Because this is the breaker. Price dips down below 25%. Okay, same deal. 20 handle stop loss. Price dips back up. No worries. As long as it doesn't pierce through this old high, we should be good. So, look at that huge sell-off. We were in this miniature sell-side program, sell-side delivery program that's gonna get us where? To discount pricing. What other forms of discount are there? I think I told us Wednesday's PM session lows. That's a huge draw. I'm interested in seeing what's gonna happen because that's asking for way too much in my opinion. But and again, any excuse to get us down there, right? And I'm talking news, would be a catalyst, quote unquote catalyst, to get us down lower, right? Whether it's planned or not, we have unfinished business down here. Unless we generate new sell side interest that can, well, actually, no. No, we would have to refer down to these legs. Because higher time frame, we are also, this is also part of a larger buy side program. See that low to high. So yeah, I would have liked to see an SMT here. Would have marked our A leg, B leg, right? Have that slingshot effect, send it higher. But no. You see that in US 100, it was referred back to. US 500 referred back to, and US 30 referred back to. So it would have been a great little slingshot to get you down lower. If I zoom up for a moment and look at our opening range gap in the form of electronic trading hours, I mean, just look at this. Appears down below the upper quadrant, going into consequent encouragement. Wow. Like, I'm looking for this whole gap to get filled. Wednesday at 135. Curious at Wednesday at 135. Oh no, even this was already referred back to, yeah. So what else is there? Tuesday, London close. Oh no. Excuse me. Wow. All these lows are easily pierced. I'm curious what we're gonna see in the news about the markets. We also had FMC yesterday too, so I'm interested. Oh my gosh. Okay, we're gonna get spammed with a bunch of ads. But we just look at the headlines here. Earnings. Oh yeah, and then we also had red folder news today too. I wonder if today's price action is just gonna be, you know, a continuation, right? Because it looks like we've been consolidating all of London. So I wonder if we had a market protraction at midnight or a delayed market protraction. Let me just update my markings now, since we saw what we had to see. Okay, so on CFDs, we have a low high, lower high, lower low. So what do we? What is that? It's a type 2. Type 2 dealing range. So you see that those keep expanding down lower. And then it's 9:46 now, so we have the 9:15. This. Okay, and because it's so it's kind of apart from his other partners, I would just refer to the high here for turtle soup. And in addition, we have this bullish dealing range that's all balanced. See all the sell side delivery, later balanced with buy side delivery. This whole area is balanced. So if it was referred to back up here, let's probably just pierce it up to turtle soup, continue down the sell. If it does that until from now until 10 o'clock, right? Plays change. Getting into this price action is just chasing price. Why? Because again, we have several, think of it dealing ranges from, for example, this high or this low. Why would you want to sell where it's cheap on discount? You know? You could also refer back to this buy program as well. It'll be, will still be relatively premium, okay? But there has been no sell side that can be referred back to, and no highs either. Speaking of highs, I should probably be marking down my open here. This could be new. Wouldn't that be interesting to see price go from this low to attack this high, pierce it? And you also have this dealing range from this high to this low. Point is, I'm not doing anything right now. Let that 950 to 1010 macro begin. You know what? I'm gonna add the YM. Let's see here. ES1, MQ. Just a little conflicted on what I should add here. Okay, this is the down micro futures. Yep. So let's move you up here to down here. There we go. Oh, what in the world? Oh, I see what I should have done. Okay. So even even I still get confused here sometimes. All right. Okay. New paint. That way you're with your little friend here. Of course, style candles. Done. And let's refer back to candles. Civi. Okay, some buy side liquidity up there. Order block. So lower. Potion block. What is this? Music. Hang on, guys. I gotta change this music. It's making me exhausted. Oh no, I'm not seeing any good entries besides the one that we pointed out from this morning. And again, you had to refer back to SMT twice there. That was interesting. And again, you don't just trade off SMT alone. You gotta find supporting structure to help you navigate with SMT. And because we had this big expansion of higher, right, with some leftover business, if you will, you could have been interested in seeing these Asian lows get tapped once price was hovering up down here. Why? Because that was the only liquidity that was left behind. So when price expanded down lower and created these new highs, you could have seen how a small miniature sell side delivery program could have initiated uh, a price action to divert back to those lows, right? Because if it wasn't, it would have just been able to just take this low right away, create S&P divergence low, and continue its uptrend, or it could just continue going. It could just do its own thing. It doesn't have to retrace up to 25%. We just like to see it. If it doesn't, no, just let it go. Let it keep doing its thing. Let it keep letting it reprice higher and let the suckers go in. I'm sorry to say, but let the people who just want to follow price get in. You know what? I think I have the right to say the word sucker because I've been a sucker too sometimes too. And if you look at my demo account, look at this. I thought it was a continuation to go up higher because of what I was telling you guys earlier about the S&T divergence, right? So I really did believe we were going to see higher prices. And then, nope. Once, twice, nope, nope. That's all right. You live and you learn. The hard part though is always when to do what. Because you could look back and probably think, oh, we had S&T here now, but when it was live, I was treating this as like the way I usually put interpreting price. S&T, um, first phase S&T and second phase S&T. The first phase S&T to me is the reaction of old highs, right? So in this case, it was these highs. The moment we had that first reaction, that was my first phase SMT. If we react on that high again, I interpret that as second stage SMT. Okay, so price would retrace down lower to go up higher again. In this case, it was retraced, it just didn't go back up higher again. Because I thought we made a higher high, we were going to see higher prices, but as we just saw in futures, So high and then lower high. So that's another SMT divergence that could have been taken, or another entry. Another miniature sell side program from this low to the high, to this high up here. They get 25% of it. So, and now we're seeing this reaction now because of what I was telling you earlier about the type 2 dealing ranges tend to act like it's a reversal. So I'm seeing price behave here like sort of like a magnet, if you will. It's being taken down from where almost piercing equilibrium, but it's being pulled back. But higher time frame wise, I mean, price can still dip down all the way, as I was saying, exiting out of this external range of liquidity. So there's a lot of things. Or something could happen, quote unquote, in the markets that can generate sell side within itself. Like we could take the opening range of this high to this low, make it react up this low instead. Then we'll just anchor our hips from high to low, let it close above 25, and then continue that uptrend. Like the market can generate self-interest. Doesn't need to have sponsorship from anyone. It can just create its own liquidity and base it off that. It's not, the pressures of the people. And the only one way that I can make an analogy of this is that think of it as an explosion, as a grenade. The 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 chemical reactions that occurs inside on a grenade, does it happen internally or outwardly? It first needs to react off inwardly before it can expand and react outwardly, right? So that's kind of like the way I see the market as well, where even though you have your layouts, where you have your projections and you have areas of interest where you think the market might be drawn into, the market can go and generate itself into a consolidation phase, go into a time distortion phase, if you will, and then it's going to create its own self-reliant sell side, for example. So it's going to start creating these chains of reaction of events where it reacts up these old lows that it created newly from time distortion, and then as it reacts up those lows, it'll start expanding and expanding, expanding, slowly growing stronger and stronger until you see it meet the supply, if you will, of the old high. So it kind of like in a way, even though you have your own measurements, your own predictions of where you think price will go, the fact that price can at any time just go in there and start doing like consolidation, like from here to like the PM, generate buy side and sell side interest, react on one of those liquidity pools, and then continue onward with its mission, or suddenly reverse. That's kind of like how a grenade would react. That's kind of like one of the lessons, or just kind of some of the mechanics that I see in the market as well. Another way I can put it is kind of like how take any remedial job. Let's talk about being a cashier, right? A cashier, when you clock in and clock out every single day, what do? They handle transactions in a point of sale system. Okay, but sometimes the cashier sometimes might have an off day. Right? They might come to work sleepy. They might come to work late, or they might come into work not in the mood, and so they're gonna do things slow. At the end of the day, it's still dealing with transactions. Same thing with the market. Some days it comes late. Some days it doesn't want to do much and it wants to take things slow. That's when you see consolidation form. When you have a long line, your cashier can get a little overwhelmed as well. So, they can panic, freak out, just kind of like that. So that's kind of like how I see it too. And as I was talking to you guys about the other time, that other video as well, when I was a cashier, sometimes I would deliberately go slow when I would see a huge queue line, just so that I can avoid dealing with the carrying customers, if you will. If there was a tough customer in the line, I will deliberately move slower on the current customer so that the the future customer can be dealt with someone else, right? And this is kind of like a little strategy, right? And so yeah, kind of like that as well. But I will still continue doing my job, hence the transactions, something like that too in the markets. Sometimes we see that liquidity pool and it's obvious it wants to go down there. But what happens when the market starts doing its consolidation, right? Then it's like, we still wanted to go up here, but why is it not going there as quickly as possible? You see a breakdown of a little high, boom, we're in a small miniature sell side delivery program, and then it starts reversing, going down when we all thought it was going to go up. See what I mean? It's kind of like that, and it all happens internally. It could happen at any point in time throughout the day. That's why I that's why position trading can be really risky as well, because if reactions occur from the inception from within, the hand can go in there. Like let's say you have your projection set for Friday, but on Wednesday the hand goes in, and then they do start doing a little consolidation. They start generating sell side and buy side interest, and then before you know it, your position reverts, and now you're at break even or you're at a loss. And then you as the operator think that it's your system that's at fault. Sometimes it may not even be. Okay, so it's already past the 10 o'clock hour. Let's update our new markets, right? We can remove this now, since or you know what? Let's take a quick screenshot so that we can refer back to this at a later point. Uh, Smile, nice. And then we'll do the same thing, but for future for this angle. Okay. This is just for my own notes, right? Point of reference was 8:30. Look at that. They will react of consequent encouragement. Volume imbalance. Couple of this kind of raise here. Sorry, I had to sneeze. Okay. We can start getting rid of these markers. I don't think we need them. What was that? Hang on. What is this? Okay. Let me get rid of this too. And we are now below the 0 GMT open. If we're gonna keep going down lower, we could see an expansion up to the open, 0 GMT, and continue that sell side. If we're gonna fill up this whole range, this whole buy program. Okay, what are we seeing now? Let's see. We're still seeing this low high, lower high, lower low. This low is lower than the low of this open flout. So even though the open flout is from this high to this low, the fact that we broke down below this low, the dealing range. So we could have a dealing range type 2. We'll go up a little higher here. Okay, we could reference it via OTE, right, using the bodies, or it could be used for an excuse to keep going back up here, to retrace back up. For what? To create another sell side program. Where do we have highs that are relevant? Remember, we generated a new buy interest. Where'd you go, man? I think I deleted it. But we had generated a new buy interest up here. Where are you? Right here. Today's Thursday, so I'm gonna mark that. And then same deal. We can use this low to this high if there's SMT, get them to 25%, sell. And we want to see that happen. Why? Because we have this type 2 dealing range here that could attract price to go up higher. In the meantime, however, there are other balanced price ranges that price could throw back to as well. So that will prevent it from going higher. It'll maybe just want to keep referring to that sell side aggressively, so can do it as well. So notice in the way I'm talking, I'm giving reasons why I can go both up and down, or down. So doesn't sound high probability, right? Why would I want to risk real life money here? So it's 10. Okay, so now we have a 30 UMI down. Oh, more reasons for price to go up here. Let's see. About to finish that 10-10 macro just finished. Now we'll do, notice, bullish breaker. Notice how we reprice down here to the high of this bullish breaker, and then see if that will be the cause for it to see price go up higher. Right, we're still inside of a higher time frame buy program, so longs could be somewhat favorable out here. Excuse me. You would. Okay, so this is my demo account. So again, I'm just getting in on everything, anything that I see, right? And today we're seeing some price support both ideas. So I'm just testing out the water, seeing what's gonna happen. So one new method that I was learning about the other day about managing price is that you want to get what you're risking, right? So in this case, we're risking this much, and when price goes below, you make 25% of that money back. You essentially just want to move your stop loss down. So you take that. So for example, when you reach a 25% profit objective, right, which is $37.50 in the case of 150. So you move that down. So you take 150 minus 37. Excuse my math here, but I think that's like 110 or 105. Okay, and then when price does another 50% now, so you just take that times two. And now when you make 75% money, 75% money, 75 uh, $75 in profit, you bring that down to match that, right? And then when it matches down here, and then when it goes down again and reaches your, I guess, initial, and when it makes another 75%, another quarter, so another quarter of profit, you make 75, 37 and a half times 3, 37 and a half times 3, 112. Once you reach that, then you cut to break even, plus commissions. So that's something that I learned the other day. But if it was up to me, listen, I would have using this logic, my BPR logic, you would have just kept holding up that exposure. But at the same time, that's also not really what you would call it practical, because you want to be speedy when it comes to protecting your money. When it comes to holding on to a long, like a long position that, excuse me, like a really slow but taking profits along the way, you want to move your stop loss slower. Okay, but we're still in that bias. I'm playing the move that price is still looking for that sell side liquidity pool, and there really isn't any right now, except for that low that we mentioned earlier, all the way down there. So as it's making new lows, let's just see if we can get ourselves aligned with our balanced price rate logic and see if we can get into a premium array that can help us get down low. Where is our first percentage fair value gap? Right here, 931. Actually, would be interested in taking down one contract here. If we had a expansion lower, now we're retracing. The moment it goes back down here again, I'll take one out. So notice how you could have been playing that little trade, that breaker we had here, buy, and now we're seeing a breaker sell, sell. So you're trading the downs and ups of the markets. Let's give it till yeah, 10:30 to reach that open float, external range liquidity down here. Oh yeah, I was gonna take off one lot, right? Let's see. Take off one. I still see the potential of it reaching down here before in the next 3 minutes or so. See, that will take us down lower. Curious, how much does one lot or whatever making profit? Should be like $5. Where do we see that again? Filled? No. There you go. $43 in profit. Nice. How much we have to make back? I should probably move my stop loss to here. Medium threshold of this high. Matches this sippy here. Oh, low. Order block. We'll see what happens at 10:30. At 10:30, I'm moving the stop loss. So we got a minute. In 30 seconds, I'm moving that stop loss. Okay, in 10 seconds, we're gonna move that stop loss. In 5 seconds, we'll move that stop loss. There it is. You gotta excuse trading view sometimes for the minor hiccups. Now, when we have this, right, why did I do that? Because now the new balance price range is from this low to this high. I'm willing to hold up to the medium threshold of this block entry. Whoops. There you go. Something I would be interested in also is taking another sell above this high up here as well. Why? Because this range from this high to this low, this dealing range, um, it's far apart. It's not tied into this. If they were stacked together, then yeah, we would have been taking an OC entry down lower. But because it's not doing that, I'll treat this as turtle soup down lower. And we have a position open here. So if it goes back up there, we'll be on the negative, right? So if it stops us out, no problem. We can just get another entry up here. We're on this phantom leg, not necessarily a sell program. Okay, so we're trading really low probabilities here, so this is kind of risky actually. That's why I do it on demo. Okay, I like that the bodies were pulled here. Weaker bodies, but here's mostly just wings. So maybe a small value gap lower. Let's see what happens. We can get rid of this now too. Keep our charts clean. Oh, look at that snap. Okay, so then we have a we have an implied failure swing here. So this is actually good news for us because we're looking for lower prices, right? So in the next, what you may call it, next 30 minutes, we want to see price fill quickly as possible. I forgot to spell. We want to see price fill this from the moment 10:30 opened, from this low to this low, fill it out quickly. I'm gonna use the bathroom. I'll be right back. Well, watch, see if it hits down low. Sorry, I had to step out for a moment there. But do we see a retracement below open float about before 10:30? When did I say? No, before 11. Yeah, we did. So that's good news. I'm gonna go ahead and close another one. Maybe move our stop loss just another quarter. See if we can get down a lower move. So where are we now? Like at 100? 100 bucks maybe? Not like 90 bucks. But look at how much we still gotta recover. Oh boy. It's about to be 10:45. So what? What can we expect 10:45? This to happen. Now this will be balanced. Stop loss to 11. We're actually getting ahead of ourselves, so I won't move our stop loss just yet. I'll move it into. Let's move it to this to medium threshold. I'll confirm it at at 10:45, so in a couple of minutes. Why does it drinking sound so weird? Alright, now we'll confirm it. Okay, now we're dealing with this new balanced price range. So we don't want to see price dip back up to these levels unless it's going to do turtle soup lower. So as of now, this is the play. I'm wondering actually what kind of higher time frame structure is in place that can maybe be a hindrance on our position. You want to look at that now? So here, we could see anticipation for a higher high. So we'll be piercing through that now. Okay. Why? Why could this be a hindrance? Because now we have an A to B like dealing range. We expanded up higher. Now we're reversing back to that level. We set up to 75%, which is around here, which matches the same as this inverted bearish breaker block. Could not be used as discount, by the way. Aligns very well with our 75% level. You can see a reaction here. Take price up higher. Wouldn't have wanted to see that. What doesn't make sense to me is that there's no liquidity here to refer to. So if liquidity was there, you have an inefficiency you see from this level this high, but here. Yeah, so we have to be very wary on this position potentially reversing on us. So that's why we have to set our stop losses, right? At good levels. Look at that. Hmm. Higher low. Sorry, low, lower low, low, equal low, relative equal lows, and then low, higher low. So you know what would be a really good use of my time? Analyzing the dollar. I should be analyzing the dollar actually. Um, let's see. This is my profile. Let's see if we can maybe do it here. I feel like that'd be a really good use of my time. Because I don't really have anyone on the stream, I can just go ahead and do my own thing. If anyone can actually help me, I'm trying to make it seem so that I don't see the digits, I see the ticks or something. Because that's a little annoying too. Positions. Ah, there you go. Profit loss ticks. Percent. Okay, that's good. Okay, so I'll take off another. Oh no no no! I'll take off another partial there. Oh shoot 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 shoot! Sorry. Partially close one more. So as we're creating new lower lows, we're taking a partial. Nice job. So now it looks like we're back in profit on the account. But there's still more room for this guy to keep going on lower. So we're gonna see how long this goes, you know? And that will move it 51, 52, we'll move it another quarter. 8, 9. Done. Okay, so move the stop loss another quarter of this dealing range from this low to this high. Okay, now we're beginning to see reasons for price attack of buy-side liquidity, right? I'm not calling the low just yet. That's why I'm still taking partials as we go down lower. But the moment it decides to revert back and react off these old highs, be a good reason to seek for a sell-side delivery program soon. We're also below equilibrium of this dealing range from this low to this high, so there's that. The moment this hits 11 o'clock, I am moving my stop loss down to this low, to this low of the balanced price range, and then we'll see if we can garnish all this. The only thing, however, that's going to get in the way is the 11:30 macro that can fully retrace back up here before we continue to see more sell side delivery. Or, yeah, it just reverts. There's no SMT and it just wants to keep going up higher. Alright, so here's what I'm going to do. Ready? I'm going to update my stop loss and then look at this here. Okay, another balanced price range. Oh, shoot. Balanced price range up here. Now I'm going to move my stop loss down to this threshold here. And that's all I'm going to do in terms of managing the trade. I'm going to let this thing run, see if it's going to head down to this low, which is an old low, which we do think is just going to pierce. Oh, it's already referred back to. So we really have this external range liquidity that we could reach back up to. I'm not going to call the low, right? We don't call lows here. So at any point, this can just revert and attack this buy side liquidity pool. So until that happens, we want to continue seeing price head down lower, right? Because if it's still in this higher time frame buy program, we need our anchor. We need our phantom to become an actual, you know, this phantom leg needs to be like a solidified leg. Right? And it can only be solidified once it hits sell side liquidity, which we won't be seeing this for a while. Now we could reduce this. So I like how this is stacked with this one, and this is stacked with this one. So uh, OT right here. First OT is down here. If you want to re-enter, see if that will take this down lower. Okay, I'm gonna move it down another quarter. And we're gonna need lower low after that retracement. So I'm gonna take another partial out. Oh, come on, change 6 points. Okay, and see if that will continue to give us that sell side delivery that we're anticipating. At 11:15, I'm updating my stop loss. Excuse me. At 11:15, I'm updating my stop loss. Okay, it's 9:15. Now we're updating our stop loss. And where's that stop loss update? There we go. Now we'll look at this. What's been balanced? This low, this high. Stand up forward. Okay, and I want to protect myself a little bit more, so I'm going to set myself to 75% of this range. Should have no problem reaching down here, so that's why I want to set this as my ultimate target. Is that easy, low-hanging fruit objective right here. Hopefully we can get there before the 11:30 macro begins. Okay, so I'm moving that down on the corner. So to the mean impression of this. Because essentially we've pretty much accomplished 50% of this entire block's move, right? So as it's creating 50% in time, so this starts at 11:15. Once we reach around 11:22, which is half of 15, we'll move down our stop loss. We'll reconsider.